Hey guys, what's up? Sorry about that delay. I was actually expecting to see the stream live, but the settings in the stream got modified. So I thought I've been streaming for the last 11 minutes, and I'm so embarrassed, guys. But I'm here. What's up, guys? Sorry. Let me just make sure the stream is up and running. Yeah, we're up and running. What's up, guys? Uh, okay, yeah, we're live. Okay, sorry, guys. What's up? Long time no see. I hope you guys had a very nice week with your mothers. I'm not sure if you guys are celebrating Mother's Day. What's up, Rash, Fad, Johnny? What's up, guys? So let's start the stream. Sorry about the delay. So what's going on with Bitcoin right now? Bitcoin right now, from what I can see in the blockchain, it's actually looking like it's finding support, and I think we're going to be moving up pretty soon. I was actually expecting to see the move to the upside from the CPI, but the CPI actually just gave like this weird pump and dump. But from what I can see in the blockchain is starting to give me some signs that we're going to be moving up. So I'm going to be giving you guys some targets, some upside, what I'm seeing right now, and I'm going to show you guys what it is that I'm looking at this moment. So just to be sure, just to be perfectly clear, I'm not expecting to see Bitcoin make a new higher high. I'm not expecting to see Bitcoin go into a bull run or anything like that. I'm just seeing a chance for Bitcoin to start moving up, but in the short term, and it's not looking like it's going to be a very strong move to the upside. So it's going to give us another short entry. It's going to give us another entry to start looking down into the markets. So I'm going to be expecting still to look at the markets short. So I'm not sure if we're going to go sideways for extended period of time. I'm not sure if we're going to, or if we're going to be breaking down like in a day or two or three or a week. So I can't tell you guys that because so far the markets are being very stubborn. In the end, that's one thing you guys need to understand. So far the markets have been very stubborn. The markets do not look like they want to crash, but it doesn't mean that we need to rally or we need to go higher. So in the end, the markets are waiting on something. The markets have absolutely everything they need to start rallying and start pumping really hard, and they're not taking that chance to start pumping. So that's a really big red flag for me, because it's telling me that people believe that the markets are very overvalued right now. People believe, even when it comes to Bitcoin, people believe that Bitcoin is very high. It's very overextended. People believe that the S&P is overextended. People believe that a lot of the assets are overextended because they're not breaking their highs. So it's looking like in the end that we're still doing a topping structure. Now, the thing is that this is very frustrating because it's very slow and it's very methodical. But I'm going to show you guys what it is I'm seeing. And I'm going to set up the huddle chart to give you guys like clarity and give you guys entries for longs. So I believe that we already are done with the longs. Sorry, I think that we already are, we're getting into the bottom channel. We're looking into a bottom right now. And I'm looking at two main structures. The two main structures I'm looking at right now are these swing highs. The chart's a little bit dirty, but I mean, it needs to be that way. I'm looking at this little parallel channel because we got two parallel channels to be really fair. But I'm looking at this cyan one where we are testing out this channel. And we still haven't bottomed out on this one. So we can very easily go down and we can have another entry at 26,400 or around this range and then have a move up because the blockchain hasn't like fully bottomed out like really hard. But to be really fair, if we lose 26,400, then we're going to crash. If we get below this trend, then we're going to go down and we're going to go down really hard. We're going to have a big, massive dump. So Bitcoin right now, it's currently sitting like at the very last line of support. And this is as good as it gets when it comes to one entry. And this is as safe as it gets before you start actually turning like super bearish. The markets right now, they're very overextended. They're very overextended to the upside. They're just very high. And it's very hard to see the market sustain this or go higher even more. So this is going to be a short-term trade. And the upside I'm seeing, it's just going to be a small pump, maybe 2,000 points and a half until we break down again. So if you guys want to take it, I mean, that's fine by me. I would recommend you guys to take profits from your shorts and start looking for another short entry. I think it could be up here at 27,800, 27,900, or it could be all the way over here at 29,400. But much higher than this, it's going to be supremely hard. It's going to be very hard for us to get above this level. So there are two channels we got to keep an eye out. And the first one is the cyan channel. The cyan channel, it's tracking to a swing high. And right now, it's going to be looking like the immediate line of resistance we're going to be, well, the second immediate line we're going to be looking for resistance. The first one is sitting right here at 27,200. If we can defeat 27,200 in the next few days, then you can easily see us going to 27,700. And if we defeat that, then we can go all the way up to 27,500, 27,600. Because in the end, this is a rising wedge. It's a big, massive rising wedge. Sort of a dirty one, but rising wedge, they tend to have pullbacks. So it's very normal to see the price action go back into this. It has actually like a 70% chance of doing this and just going back down. So don't take any risks. Take some profits out and reposition yourselves expecting for another short entry, because I believe it's going to happen. I'm in a small long right now. I'm not really heavy in the long because I don't want to risk any money. I'm just trading this a little bit, but I took half my short out and I'm going to be re-entering the short. Now, the other big channel I'm looking at right now, it's where is it? Is it this one? Yeah, it's this one. So we got two channels. Let me turn off this little trend line. We got two little channels down here, and the other channel we're tracking, because we got two options. It's either this one or this one. The reason I'm not painting this channel like the really big main one, it's because in the end we are reversing the trend, but we are descending among the trend. So remember what I showed you guys like several videos now, that when we have a descending trend, this descending trend, you can get above it, but you need to hold it. And if you can hold it, then you usually have a trend reversal. But there's a lot of momentum, and the momentum is still bearish. So you can see that we are still, even though that we reversed the trend, we are just attempting to bounce off it, and we're not fully being able to bounce off it. So it's with my mouse right now. And we're just bouncing on and off this little trend. So right now, there's a lot of things that are right immediately either above us or below us. So right now, this is the point where we're going to be looking at a reversal. If we fail this, then we're going to be going down to 25,400. And I think the reversal is going to be even deeper than that. I think that the bottom is going to be deeper than that. But so far, the bear market or the bears haven't been really pushing the price down. So we're just retesting this out, and we're about to have a move to the upside. We have a lot of we have a few EMAs and MAs at this level. For starters, we have the 500. I think we have the 500 daily moving average. It's right here. We're back above it, and we're holding this as support. So this is a strong level of support, and the markets are just confirming this level. There isn't a lot of bullish momentum. There isn't a lot of power with this, to be really fair, because you can see that the last time we had contact with this, we had a very strong push to the upside. But so far, we're not seeing that big, strong push because the markets are fearful and because Bitcoin is in the end topping out. But we are at this EMA, and it's a strong EMA. We got a couple of moving averages below us. We got the 144. We got the 144 weekly EMA above us. So there's going to be a little bit of resistance. So we're going to need to challenge this, move above it. But as I told you guys, if we get above 27,200, we're going to be just fine. And we're going to be seeing the reversal. There's not a lot of things at this level, to be really fair. Also, when it comes to divergences, we have on the 4-hour, we have hidden bullish divergence, which is really powerful. And usually when you see like the really strong momentums, the swings, usually see this EMA, usually see the hidden bullish divergence. But you tend to see a lot of different divergences when you're topping or bottoming out. You can see that you tend to have like these big divergences. So we have a lot of bullish divergence right here, but we only have it on the 4-hour. So this move, it's not going to be really high. We have it on the 8-hour, but we don't have it on the daily. We don't have it on the weekly. So don't get too bullish about that, because this was the last daily one we had. And on the weekly, and we don't have it right now. And on the weekly, we're in the same story. We don't have any weekly divergences, and we are still on the downtrend. So don't get too overconfident with the move up we're going to be seeing, because I think it's going to be short-lived. I don't think we're going to be seeing a lot of upside. But I mean, it's a good trade, and the entry it's currently sitting right now. So I mean, if you guys want to take it, if you guys want to start trading it, be my guest and start looking into it. Now, the thing with the indices right now is that the indices, pretty much all the data we're getting, it's showing very high inflation, or it's showing a slowing economy, or it's showing stagflation. So things are not bullish, and you can actually see it with the indices that they're free to move up, and they're not moving up because they're fearful, they're scared, and they're just waiting for a big catalyst to start moving up, or they're waiting for the big catalyst to start dumping down. But in the end, what the markets have right now, they have a lot of momentum. So the momentum is still going to be looking for the upside, even though that is stalling. The momentum is still going to be trying to be looking to the upside. So the markets are still going to try to move to the upside. The markets are still going to try to go higher, but they're going to fail very likely because we don't have enough strength to get back into the trend and to recover that trend. And that's with Bitcoin. And even if we look into the Fib circles, let me show you guys the Fib circles. The Fib circles are a little bit dirty because I haven't updated them in a while, but because they don't need any updating. But you can see that we have this white Fib circle of resistance right above us. It's sitting currently at 27,600. We got a descending one right here, but we also have this one that's been acting as support right below us. So we got two important ones. These orange ones, they're not super powerful, but they're pretty powerful. And we got one currently sitting at 26,500, which would be like the big bottom. We don't have, and we have another one sitting at 26,800. I think this Fib circle has been the one that's been acting as support. And we got another yellow one all the way down here where it's actually starting to move down really aggressively. So it's tracking to this channel. So if we hold this channel, then this is going to be the orange Fib circle, and this is going to be the low where we're going to be looking at the bottom at 26,500. So just be open to the idea that we may go down and we may retest this in the next day or two, and adjust your either DCA your long in, or try to get in as narrow or as close as possible, and keep a tight stop loss. That's just pretty much the only advice I got for you guys when it comes to like going into this. Now, another thing with Bitcoin right now is that Bitcoin currently, it's not looking like it's super bullish. Sorry about my kid crying. Just woke up from her nap. Well, let me show you guys the blockchain charts. So the blockchain charts, they're showing me a lot of things right now. So for starters, we don't have like a lot of bearish catalysts, and we don't have a lot of bullish catalysts either. So the markets are dependent on pretty much just waiting and seeing what's going to come out with the data, because there's pretty much nothing coming along in the next few days that's going to be pushing us higher, just as much as there's nothing that's going to be pushing us down. Now, the thing with having a big crash, it's that it is going to come out of nowhere, and there's going to be a piece of data here that's going to be giving us like the big bearish data that's going to be pushing us down. So there's going to be one thing that's going to be pushing us down, but we don't know what it is because all the big obvious catalysts, they didn't play out, they didn't show it. When we look at the blockchain, you can see that when it comes to the traders are not coming back into the markets, like the big blockchain traders. And even the DCA one, which tends to be like the big trader, like the big bullish trader, he's not going back into the markets. So I'm expecting to see the markets still move down, because these guys are saying the same thing we are saying, which is the markets are bearish and that we are very likely stalling and we're going to lose the trend. But I mean, until that happens, it doesn't mean that we don't have any trading opportunities, and it doesn't mean that the bearish sentiment is totally pervasive. Now, the blockchain charts are giving us some interesting story right now. And the blockchain charts are currently telling us that we are looking at a level where we can find some support. And if you guys look at the swing chart, this chart, it tends to be the one that tells us when we find the bottom. And we are right on the edge of it. And if we're going to have a bounce, we're going to have a bounce from this point we're having today. This is going to be the level where we're going to be having the bounce. If we fail, if we dump down tomorrow even more, if we break below 26,400, 26,500, I can't remember the level I was telling you guys. But if we break below, let me show you guys the channel. If we break below 26,400, we're done. And we're going to have the big, massive crash. So this is the last level of support. And this is the level where we're going to be finding the bounce. This is the Chande. The Chande, it's not pixel perfect because charts are not pixel perfect, but we can still have a little bit more downside. That's why I'm saying 26,400. But if we can hold this level, then we're going to be seeing some upside. And the upside is going to be limited. We're not going to likely revisit the past highs because we got this line of resistance above us. And the trend is currently not looking that bullish because we've been losing our bullish trend and we've been trying to get above it. But in the end, we need to break into the bullish trend again when it comes to these charts. So you can see that these levels of resistance, they're really playing out. And currently right now, We can have a small pump, but it's not going to be a big, massive one. And this is like my most bullish case scenario if the markets decide to pump like really strong. If you guys notice right here, we have the NUPL. This is an NUPL stochastic RSI. And the NUPL stochastic RSI, it's giving us a bottom. And we have two charts that are near bottoming out, or that they're finding a level of support as we are finding a bottom on the stochastic. So it's telling us that we are getting near a bottom, and it's telling us that we are getting near a move to the upside. So be aware of that bounce. Even if we look into the charts, even if we look into the technicals right now, if I zoom in a little bit closer, you can see that we have this little, I know it's pretty messy, but bear with me. If you guys notice, we are currently adhering to this little trend line here and this level of support. So we got a little bit of support over here. Yeah, and some things it looks like we're breaking under, we're losing like the big trend, but we still have some support above us. So this trend is still remains, this trend still is holding, and we still have some upside until we break under this trend, until we break below 26,400. We still have some upside. So I'm telling you guys that this is looking like it's very close to, it's as good as it, this is as good as it gets before we start breaking down. Also, if we look into the dashboard right now, we got a couple of things, and they're not bullish things, they're not bearish things. But for starters, we don't have any big buy signals. We have like this little teensy weensy little buy signals. They're small ones, they're not strong ones. So it's just like a scalp trade if we're looking at this one. But it's not giving us any big sell signals. It's not telling us that we should be looking short. It's telling us that we should be looking a little bit long. And even when it comes to the blockchain MACD, this is an MVRV MACD. The MACD, it still has downwards momentum. It's still looking like it's going to be turning down, but you guys can notice that this thing turns up at the move, one quick swift move. So if you guys are looking for a long, if you guys are looking for entry, just look above this channel for your entry. So if you guys are looking for entry, if you guys are looking for a reversal, then start looking, above 28,500 if you guys want to be like really safe with your trades. If you guys want to be like really safe with your move, looking into the upside. But so far, we gotta look at this as the trade. The risk is very much to the upside, to be really fair. Now, also with the top chart tells us when we hit the tops and when we hit the bottoms. We lost a bullish trend, and we actually have some signs that we are in a trend reversal. We have no long confirmation, to be really fair. We have no long confirmation from the top chart. The top chart usually gives us like good entries or tells us when we're looking at good shorts and when we look at good longs. But we have to use it with the swing chart. And currently with this chart, we are above the trend. We had a retest of it, and we're going to be moving up. The thing with this is that this chart is telling us that we have a trend reversal. The trend reversal on this chart, when we start seeing this start moving back up, when we start making like higher lows and lower highs, and when we start breaking out of the trend, it usually means that you are moving against the trend. And the thing with this is that when you start moving, when you have like a lot of open interest, and when you start flipping long, when you start moving to the upside, it usually is a bearish trend. It usually tells you that you're going to start looking really bearish, unless you are in a bull market, which we are not in a bull market. But it tells you that you're going to be having more traders come in as we start moving down, because you're having more longers and people are looking for longs. And the chart is currently telling us that we are looking at a reversal of the trend, meaning that we are going to very likely start moving down, and we're going to have more longers just come in and just start accumulating into the trend and start putting in longs. But so far right now, it's not telling us that we have it's not telling us that we have a bull market. It's telling us that we're looking at a downside. We're looking into a downtrend right now. So the trend currently is now down, and you want to be looking for short entries. The problem with Bitcoin is that Bitcoin is very volatile, and Bitcoin, when it starts moving, when it starts crashing, it crashes really, really fast. But the thing is that Bitcoin almost always gives us an exit. When Bitcoin starts crashing, it almost always has a little pump, and then it starts just dumping really, really hard. You have like this last rally where you have like the trend reversal, like the big signal to start getting out, and you start breaking down. Bitcoin hasn't given us, Bitcoin, it gave us that over here, but Bitcoin hasn't given an opportunity for the traders to exit their longs and start looking for shorts. And the big breakdown, it doesn't look like it's here right now. We've been dumping, yeah, but it doesn't look like the really aggressive dumps we would be expecting when we start seeing Bitcoin go down. So I'm expecting to see a little bit of of upside, especially because we're holding this trend. Also, you can see we're bouncing off this trend. We can fail it, but when you start seeing Bitcoin on the blockchain holding the trend, especially when it comes to open interest stuff like that, you usually start seeing a market reversal. Now, there's also one really big thing about this. The market, the trend is looking currently up. So we're very heavy in longs and we're very light on shorts. I mean, we're not super light on shorts. It doesn't look like we're bottoming out on shorts, but we're not heavy in shorts. We're very heavy in longs. So the markets are actually they're very heavy when it comes to longs. And if the markets are looking to punish, they're going to punish really hard by dropping longs, and they're just going to drop. They're going to drop everybody, and they're going to squeeze out the longs. But there's also one thing about this. Usually, when you find your big tops, when you usually find your big tops on the blockchain, because this chart is tracking open interest, when you tend to find your big tops, your open interest spikes. You have a big spike in open interest, and that big spike in open interest gives you your entry for a short. It tells you that you have a lot of traders coming in, they're piling in, and it gives you like your big entry to start moving back down. Oh, that's interesting. I didn't notice that, Ben. And actually, there's a couple of things also with the harmonics. But going back into this, you usually hold the trend until you fail it. When you just fail it, you just start going down really hard and you start breaking down really hard. But you guys can notice on the open interest, you usually have like a small little peak. You have a small little spike before you have your big movement to the downside when you lose the trend. So right now we're holding this trend. We're still holding on to it. People are still looking long. And even though that's not showing that we have bottomed out, it's telling us that we are holding this as support and we still have a good chance to start moving it back up. So just be aware that this thing is telling us, the blockchain is telling us that we're moving up, but it's not going to be a bullish one. It's not going to be a really strong movement to the upside. It's just going to be a small pump, and then after that, we're going to start crashing back down again. Now, there's a couple of things going on over here with the mempool. The mempool is actually telling us a few things, and you always have to be very cautious about the mempool. And the mempool is telling us that we are having a lot of activity in the blockchain. Now, I've been reading out why we have activity in the mempool, because this tends to be real activity. This tends to be really bullish. But I read somewhere that there's a lot of people minting shitcoins using Bitcoin or wrap Bitcoin. So the process of minting new coins using wrap Bitcoin, it involves moving Bitcoin into a lockup process, a lockup period. But usually when you start seeing like the mempool being really active like this, it tells you that you're going to be having pumps. And last time we had the big pump was back here. We're having this activity right now. It's telling us that we have actual real activity in the background. And you can see when you're really bullish, you get a lot of activity. This is the fake bull run. No, sorry. Yeah, this is the fake bull run 2028. This is the first leg of the bull run. And you can see we have more activity right now. It doesn't mean that we are back in a bull market, because as a matter of fact, if you guys notice, the mempool right now, it's looking like it's topping out. If you guys notice back in the past bull run and the 2021 bull run, the first leg of it, you can see we had a lot of big mempool activity. So just because we're having this, it's telling us that we're bullish, but it doesn't mean we're going back into the bull market, because as a matter of fact, it looks like we have overextended above what you normally see in a bull market. So it's not healthy. It's not a healthy move to the upside. And if we're taking this as a bull market move, then it's telling us that we're going to be topping out pretty hard at this level. So just be cautious about that. Be aware of this also. So we're longing right now. We're longing the top edge, and we're just betting on this last pump before we start seeing the big dump. When it comes to the rest of the indices, they're being carried by other assets. They're not being carried, and there's a lot of weird dynamics happening everywhere. If we look into Bitcoin, and if we look into natural gas, for example, if we look into Pfizer, if we look into all these assets, Pfizer is dumping right now. And you guys know that I'm accumulating Pfizer right now, but Pfizer is dumping now. It's dumping pretty hard. And the reason why it's dumping pretty hard is because finding a retest, but also because we're not having any big recessionary signals right now. We're having stagflationary signals. We're looking more like we're going to go stagflationary. So I'm looking currently right now into long entries for natural gas, but I want to have a convincing breakout so we can actually start trading this to the upside. Or I want to see a bottom bounce so we can actually start moving this and start trading this. So until I see a convincing breakout, or until I see a bottoming out, we're not going to be longing this. And we're not going to be touching currently natural gas. When it comes to Pfizer, this is going to be really strong when we start going into recessionary. And right now, that's why we're not posting any more trades about Pfizer, because it looks like we are still not going to be seeing this rally until we at least have this retest and until we start seeing this trend break to the upside. So until we break this, we're not going to be looking long. And when it comes to USD MXN, it's currently under. We haven't posted this because we haven't seen the confirmation of the movement to the upside. We're still under the trend, and we still have more movement to the downside. So we still don't have a trade until we either break up or until we bounce off the support, and it looks like a convincing level support. So all these trades, or the usual trades I post, they're currently just sitting down and they're waiting. They're not doing anything. So I wouldn't get super bullish about these things. I wouldn't get super excited about these things because we're betting against the market. And right now we're just going to sit down and we're going to wait until we see some compelling evidence that we are actually moving or we're flipping to the other side. If you guys are looking for something to trade, to be really honest, there's nothing to really long right now. Maybe you can long oil, because oil, it's looking like it's going to be looking for support pretty soon. Copper, it's not giving us any confirmation that we're finding a bottom right now. So a lot of these things, and you can see even metals, they're looking like they're looking down right now. So we're going to be looking at long entries for these things. But I mean, my recommendation when it comes to metals is just stick to the shorts with these guys, the Brendan short, just stick to them. Wait for these things to bottom. We're going to be giving you guys the signals when these things are going to be bottoming. And then after that, we're going to be looking for the next long. My bets are still the same. I'm still looking stagflation. I'm still looking for these things to break down. You can see that the DXY is still basing off. It hasn't had its breakout still, but it's going to break out in some point in the future. Not a very long point in the future. Could be in the next few days. So we're going to need to see if the markets are going to be giving us a convincing move to one direction or another one. So just be patient with it. My recommendation is just to be patient. Now, also one thing about these things is I'm seeing so much bullishness right now in the markets. It's really sickening right now. It's just getting really nauseous. I mean, I'm not a guy that tends to be really emotional when it comes to trading, or that gets nauseous when it comes to seeing things, but there's so much bullishness right now. And there's a lot of things that the markets are missing when it comes to identifying the markets, when it comes to identification. And the first thing that they're missing out big time, and I'm going to show you guys when it comes to the market structure, it's that we're done with a lot of the bearishness. We're done with a lot of the bad things in the markets. All the bullish catalysts are done, but all the bearish catalysts are also done. We don't have any bearish catalysts right now. And the bearish catalysts, and the markets have everything they need to rally. The markets, the S&P 500, Nasdaq, everything has everything it needs to start pumping and start moving up. The CPI, it's terrible, to be really fair. The PPI, it's terrible, but I mean, the markets didn't dump with these things. So the markets, if they're not dumping, then they should be rallying. Because one thing about when it comes to trading theory or when it comes to market theory, you're either bullish or you're bearish, but you're never in between. When you are in between, you're bearish. So if you are bullish, you're bullish. And if you don't have any bearish things, if you don't have any bearish catalysts, if you don't have anything that looks bearish in the markets, then you should be bullish. And bullish price action moves to the upside and it doesn't go sideways. When it goes sideways, it usually tells you, especially in recessionary environments, it tells you that you're topping out. When you start going sideways, when you start having like these weird consolidation periods, it tells you that you're going to be breaking down pretty soon. It doesn't mean you can't pump even further. You can go a little bit higher. But when you are going up, you're going up. You're never going sideways. And when you go sideways, which the S&P and Bitcoin and all these assets are doing right now, we're doing this. So it's telling us that we're going to be rolling over in some point in the future. But if you guys notice for example, let me show you guys the 2008 crash. For example, the 2008 crash, 2011, you can see that this sideways movement is very prolonged. It's very long. So we can go sideways for, 3 months, 5 months, for a very long time. Oh yeah, the debt ceiling is a potential bearish catalyst, but it is a bearish catalyst if it comes into play. So far, the markets are waiting on that. That's true. I totally forgot about that. But until you have a breakdown in negotiations, the markets are going to crash with that. But we don't know that other than a day-by-day basis. Also, it could be the China recession, which already came into play right now. But Bitcoin, it's very overextended, and Bitcoin is looking like it's going to crash. It is going to crash because it has a big disparity with the jolts. It has a lot of things that's working against right now. And Bitcoin is due for an enormous pullback, like huge pullback. So it needs to crash, it needs to correct. But until that happens, we need to see Bitcoin just as the asset that's going sideways right now, because it's not doing a lot. And the S&P, other than the debt ceiling, I mean, it has no other reason to dump. Also, it doesn't have any other reasons to start pumping, but it doesn't mean that it needs to crash. So it's holding this and it's basing off, and it needs to start moving up. If it doesn't start moving up, then it's going to be bearish, and there's going to be a limit on the time until we start seeing this thing start breaking down. There's also a couple of things happening with the S&P 500. Let me show you guys on the charts. Let me show you guys with the Fib circle charts. And I'm going to go through the Fib circles in general. But if you guys look at the Fib circles, this is the S&P 500. This is the S&P. Okay. The S&P 500, it tracks very closely to two types of circle. The orange and red ones. Almost always, except when you are in a bull market, but when you are in a bear market, when you go through these red Fib circles, it tells you that it usually gives a big selling signal. And it does that without fail. When we break through them, it just tells you you're going to start dumping pretty soon. And we got through this one last week. But the S&P 500 hasn't dumped. It hasn't crashed. The S&P 500 is still holding. And if anything, it actually looks like it's going to try and get back into the trend. But the trend is still above the local top. So we need to have like a really big bullish thing to bring us higher. It could be the debt ceiling negotiations, but it's going to take a couple of weeks. I'm not sure if the markets are going to wait a couple of weeks until this happens. And we still have this orange Fib circle above us, which tends to be the resistance. When we get here, after we cross the red one, and if we find the orange one as resistance, it tends to be resistance. It tends to be the level which pushes us down. So we currently have this Fib circle coming down at us, and it's going to push us down by the end of the month, by the 25th of May. And this thing is going to start pushing us down. But the thing is, right now, that we can still have this little pump. And this is sort of like the little pump we're seeing on Bitcoin. I'm expecting on Bitcoin. We're still going to be having like this little move to the upside, but it's going to push us down, and then we're going to be breaking down. But the other thing is that we may break down after we cross this Fib circle, because you can see that this Fib circle also is another pivot point. And we haven't crashed with this one. We dumped below it and we haven't been able to recover it. But we got this one coming along the first week of June, actually around my birthday. And this is this looking like it may be like the catalyst that's going to be pushing it, or it's going to be like the pivot point on the Fib time that's going to be pushing us to the downside. But if we look into the other assets, and even if we look into the structure with the S&P, it's looking like it's topping out right here. And it's not finding enough support to break above. Yeah, I mean, if we move these trend lines, if we move the swing lows, you can see that we're sort of basing off, and we're sort of trying to find support. And it's not, and the market and the S&P 500 is not deciding if it's going to crash or if it's going to pump. We're right below resistance right now. But tomorrow we could have a bullish opening, and we just can have a move to the upside and just recover this, because we are currently right at the edge. We're retesting this thing out, and we're just having like this maybe bullish bearish consolidation thing that's happening right now. But if we look into the other assets, if we look into the other Fib circle charts, there's a lot of interesting things coming into play with the Fib circle charts. So I'm going to show you guys the bigger markets, bigger assets, all the risk assets, all the tech, and gold and silver, right? So if we look into Amazon, let me turn off the flags, all the price levels. If you guys notice, we broke above this Fib circle. Now we're going to go and test this one as resistance. So Amazon, it looks like it's going to test out 119. And this is going to be the point where we're going to be topping out 118, 119. So these Fib circles, these white ones, they tend to be like the heaviest resistance. And we got this one acting as the ceiling for Amazon right now. But if we look into, and you can see that the upside, we can have a little bit of more upside, but it's limited. It's going to be less than 5%. If we look into Microsoft, which Microsoft is bullish because of the earnings, and their own earnings are bullish, we can go all the way to 313. And I think we got another circle right here. You can see that this one is acting as resistance, and Microsoft is currently hitting resistance and wasn't able to break above it. So maybe the aftermarket, or maybe we're going to have a little bit more movement to the upside. After by tomorrow's pre-market, we may just have a little skip and just jump above this one. But this one is showing us also that we're topping out. If we look at Google, it's breaking all the resistances, and the big massive resistance at 122. And Google has a lot of momentum still, and actually finding some resistance right here. But the big resistance is sitting at 122, and we broke above this one. This one was a really important level of resistance, and we just flowed through it. So Google still looks like it has more upside right now, and it can still continue moving higher. Netflix was looking pretty bullish a few days ago, and we had this little pump, and we're going to go to 354. You can see that a lot of these things are pumping, and they're going to meet their level of resistance above them. So we still have more movement to the upside. And remember that the S&P is currently being carried by very few assets, by very few things. So all this movement to the upside, it is going to be muted, it is going to be limited, and it's going to fail in one point. And we're just going to keep on breaking down. But it doesn't mean it's going to happen tomorrow. It doesn't mean it's going to happen in the next few days. And from what we can see in the blockchain charts are telling us that, or we either break down tomorrow or we're done with the downside. So a lot of these charts are not telling us that we're not breaking down. It's telling us that we're breaking above critical resistance and we're starting to move up again. And we're going to be finding some pumping. Now, the thing is that the S&P 500, is it going to go all the way to 4289? 4289? I don't think so, because there's a lot of limitations on this movement to the upside. But it doesn't mean we're going to be breaking down. So just be aware of that, and just be aware that there are good odds that we're going to be moving up. Also, when it comes to gold and silver, because we also got flip circle charts, I'm going to show you guys the level of support that we're looking at when it comes to flip circles. You can see that the red flip circle acted as resistance. I actually thought, to be really fair, I thought that gold was going to, and silver were going to be holding. But Bitcoin has been tracking to gold really closely. And you can see that we're in no man's land currently with silver. There's no support. So we're going to be looking at support at $23. So if you guys are still in the short on gold and silver, then look at your entries currently at 23, 22. That's going to be looking like a good entry. But when it comes to gold, gold has this level of support below it. We broke above this, and we got this level of support currently at 1985. So 1985 is going to be level of support. So even if we break down, it matches from what we can see in Bitcoin. So we can still have a little bit of a move down, and we can start breaking down. But the thing is that with gold, sort of like with Bitcoin, gold has this level of support. So gold going down all the way down to this fib circle, like right now, it's looking like it's not super viable, because this thing needs to start, it's going to base off below we hit the bottom of this fib circle. So maybe Bitcoin is going to have more of a muted reaction, maybe a little bit more of an exaggerated one. But currently, even though that gold still looks like it is, let me look into a closer time frame. It can still move down, but it's currently following this trend. So until it breaks under this trend, I mean, we still have some opportunity for upside still. And it can just have another base off. If you guys notice, Bitcoin is doing something similar to gold. And you can see that this is a level of resistance. So with gold, we're looking at a top, even in the next few days, of 20,000. If we break above it, we're going to continue moving higher. And same goes with Bitcoin. So Bitcoin it's emulating gold. It's emulating the same trend. So we can go back to this trend line all the way to 28,300, 2,400. That would be it. Hey, what's up, Adam? Oh man, long time no see, man. So just be aware of those things. Be aware that the trend is still not done. We're still not looking like we're going to be in the bear market, and we still have some indication on the blockchain that we're going to be moving higher. Now, my recommendation when it comes to trading, honestly, if you guys are in shorts with Bitcoin, if you guys are in shorts in silver and gold with Nasdaq, I would still stick with them. I would still sit down and I would hold on to them until the last second. Even though it may reverse, I would be holding on to that until the last second, because in the end, the next high, it looks like it's going to be a weaker high. It doesn't look like we're going to be having a super bullish strong high. It doesn't look like we're going to be having a big massive rally. I think the trend to the upside is done, and hopefully, if we're lucky, we're going to have another pump, and we're going to be having another entry for the short. But this is topping structure, and Bitcoin is looking like it's topping right now, and we're losing momentum. Even though that this is a bullish pattern, you can see in the markets that we're losing momentum. The CPI, it's cooling down, to be really fair. Let's talk a little bit about the CPI, because we haven't had the CPI stream. But I want to talk a little bit about the CPI. The CPI, it's looking like it's going down. Even if you take it like the super core, if you take it as the core CPI, because there's just so many things happening with the CPI right now. The CPI, let me look into this week. the CPI, it doesn't look super bullish because in the end, even though that the expectations, or sorry, that CPI is coming in cooler, it's terrible because the Fed is looking at a 0.2% rate on the CPI. We're at 0.4 even on the core. So the core is super high. The super core is super high still, and the normal CPI, it's very high. So it's very above target. It's telling us that we have sticky inflation. Even if you look at the PPI, it is cooling down, but it's still telling us that we have a lot of people, we have a lot of inflation in the markets right now. Even when it comes to core, super core, no matter how you view it. So the markets are bearish, and I was expecting to see the CPI surging, but the CPI not surging, the CPI or the inflation just sticking around the level where it's sticking right now. It is a very, 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 very bearish thing. You do not want to see that, and we're going to, and actually, if you were to ask me, stagflation, it's the worst case scenario because the economy is currently going to sit in stagflation, and then it's going to go into recession. Well, it's going to go into a deflationary recession because they need to cool down the stagflation. But the problem with stagflation is that it brings in pain for an extended period of time. So we can stay in stagflation for 5 months, 6 months, 3 months, another month. We can stay in stagflation for a very long time, where inflation is just going to be eating away, where we're going to be looking at 1% or 2% inflation over the next 5 months until something breaks. And then when that thing breaks, that's when you start going into the actual recession and when you have like the big market crash. But you already have a lot of money being eaten out by stagflation. But then after that, you have like the big recession that's going to be bringing in a lot of pain in the markets. So very high inflation, it's a very bad thing. You do not want to see high inflation. You want to see it tick down, and you want to see actually, and the problem is this: if you see inflation tick down really fast, it means we are in a recession, which actually I do believe we are in a recession right now. The forward-looking data is showing high inflation because it's stagflation in the end, but it's telling us that we are already in a recession, and you're starting to see that slowdown everywhere. So it's just very crazy just to see how the markets are doing like this last hurrah, this last rally before they start breaking down and until we start crashing. But we're very close to it. And the data is telling me that we're very, very close to it. And it's looking like it's going to be very, very nasty. One thing also about, one thing that's going to help us narrow down when we actually get into recession, I'm going to show you guys. Give me 1 second. It's the Fed data. The Fed data is going to be giving us, when we have the yield curve inversion, we are inverted on the yield curve. Give me 1 second. The yield curve inversion, it's in play right now. It's currently in play. But the thing we want to see when it comes to yield curve inversion, it's this. Let me show you guys. What's the usual sign that we are reversing? When the famous yield curve inversion is usually when you have your yield curve, and talking about the 2 to 10 to 2 year inverting to the downside. When you have this go down, it usually means that you'll have flashed the recessionary signal. And when you flash the recessionary signal, it tells you that, yeah, we're done, and we are going to 90%, we're going to have 90% chances of going into a recession. But the actual recession doesn't start until you have the yield curve inversion get back into mean. When this goes back to the top, when this goes back into the black line, which is back into the median, the mean, that usually is your signal that you're going to be going into recession. You guys can see that when we cross the black line, we go into the gray band. The gray band, that's your recession. That's when the recession officially starts on the indices. So we have this blue line, it goes up, but when you cross it, soon after, maybe a month, maybe 3 months, 4 months, but soon after that, you initiate the recession. You have the big crash. 9 out of 10 times. I think it's higher, but I'm just saying like a number, right? Right now, we're having the yield curve inversion going back into mean. At this rate, it's going to come back in maybe a month or 2 or 3. A lot of economists are actually thinking that's going to come in September. I think it's going to come before that. I think it's going to come in like in the next few days. But we're going to go back into this. And the moment we start seeing this invert, the market's going to get really bullish. The markets are going to think we have the soft landing. But after that, a few days after that, a few weeks after that, we're going to have the big, massive one. But to be really fair, there have been times where we have had recessions before we have had the reversion into mean. It tends to happen. You tend to see the reversion into mean, but you can have recessions without going back into mean. So I'm just sitting still and I'm waiting to see when it's going to happen. And you got to build up your positions, because remember that the stock market can go sideways for a long time. And it doesn't mean that we are going to continue going higher. I can even show you guys with Bitcoin, or well, not with Bitcoin, but with the S&P 500. Let me see if I have this Fred date over here. It's going to be 10-year, 2-year Treasury constant. Yeah, 10-year to 2-year constant. Minus 2 year. Oh, minus 2 year. Sorry. Must be here. 2-year. Okay, so we're going to need to build this one up. Okay, give me 1 second, guys. 2-year. TVC. US 10-year. 10-year minus US 2-year. Okay. It should compute. And let's see if this one comes out. Is it down here? Oh, I forgot to put in the new scale. Symbol. Where's the symbol? I'm trying to show you guys on the S&P. Oh, it's giving me an error. Come on, give me 1 second, guys, to have this chart pop up. I've never done a comparison, compare one with this one, but it should work out. No. Okay. I have it over here. Oh, yeah, well, I gotta tell you guys to trust me, bro, because I can't show you guys on the chart. But the inversion, that's going to be the big signal that we're going to be having the recession coming in. But there's a lot of data that's telling us that we have it already here. It's already present, and it's going to be looking like we're going to have the markets bring in extreme amounts of pain. So, I mean, it's a little bit of a flip side over here. And I'm going to go through some Fred charts so you guys can see just how severe everything is looking like right now. There's also one, totally forgot about this one. There's also one very big recession sign, and it's CPI with oil. When we have oil invert, inflation is usually preceded with recessions tend to be preceded by oil. When you have oil spike up, the red line is oil, the blue one, this is the CPI. If we zoom in, you're going to notice that when you start seeing inflation go higher, when you start seeing inflation moving into the markets, it is usually led by oil first. Oil starts pumping, and then after that, you start seeing inflation spike higher. And you can have oil start moving like a month or two ahead of time. But when you start losing oil, and when you start losing oil prices, that's when you start seeing also signs that you're going to go into recession. So almost all recessionary cycles, they start off with oil spiking, where you have the spike in oil. This is where the spike started. And then you have an uptick in CPI. CPI starts cooling down when oil starts cooling down. But when you go back under the median, when you go under the black line, it usually tells you, and in this case, this is a delayed indicator. It's a lagging one, but it tells you that you are in a recession. So when you have like this really big spike, and when it goes down and you go under the black line on the red one, let me show you guys on the 2000 right here. It tells you that you start the recession. It gives you like the big signal that you are in a recession. We'll go to 2000. Let me show you guys over here. Oh, sorry, I went too ahead. You go up, you have a big spike in oil, and when you go under, that gives you your sign that you were going to go into recession. Even if you pump, if you have your pump, when you go under the black line, that's the death signal. That's like your big signal that you're going to go into a recession. And soon after that, you start receding and you start going down, and inflation starts going down really aggressively. It happens once and again. You have your big spikes. You have your big spikes in inflation. And for example, in the 2008 crash, inflation was preceding, but you have the really big spike in inflation. When you went under the black line, you started going, well, the recession started back here on November 30th. But the last leg, the nastiest legs, they start when you have oil go down. And you can recover it and everything, but it doesn't mean that you're going to get saved. 2000, this is 2000 crash. We had oil have its spike. Inflation had its spike also, and actually had like a really big trend in inflation going over here. You can see it's pretty dramatic. You went under the black line, and soon after you had a recession coming in. We're doing the same thing right now. Oil is doing the same thing, and inflation is doing the same thing. We have been under the trend for 5 months now. So it's another really big inflationary signal, a really big recessionary signal, because even though that CPI is not going down, by the time the CPI shows a cool down, a really big cool down, the markets are done. We're not going to be looking at upside. We're going to be very well in a downtrend. And oil hasn't been able to recover. And it's a little bit concerning because even though that we're having stagflation, even though that we have inflation going into markets, this relationship, it's telling us, it's giving us a big signal that we are going to go into recession like any day now, any moment now. So all the tops we make should be tops to short. We should be looking at these tops to short. We shouldn't be looking at the tops, looking for more upside because the markets are telling us that we're done here. And even when it comes to debt, you usually have your big spikes. This is, for example, CPI with debt, right? When people owe money, just before you have a big crash, you usually have big spikes in credit debt. So, for example, the red one is the CPI. Blue one, that's debt. The blue one is when people owe money. When you have your big spikes in debt, big spike over here, when you lose the debt, when you have people losing debt, that's when you have bank defaults. That's when you have recessionary, big recessionary signals. When people start having like this really big spike in debt, and when it starts going down, in tandem with the CPI, it tells you that you are about to begin the recession. And this one is a little bit faster because when you start turning down on debt, it means that you are in a recession because banks are the first thing to fail. And you usually take the move to the downside as the beginning of the recession. You can see that it's pretty immediate. If you guys look, when it starts turning down, you only have 1 month or 2 months or 3 months before you start seeing inflation and the recession kick in. So when this line starts turning down, it gives you it's like your sell signal, like your big macro sell signal that you should be turning down also. Inflation is going up higher here. Debt is going higher because the reason why debt goes higher, it's because people start using their credit cards and their debt to start living. And when you start having a lot of debt defaults, it either means that it's because, or when you have your debt going down, it usually means it's happening because people start paying off their debt, meaning that prosperity is coming in, or because people can't pay their debt. And usually it's the latter one, because when you have inflation, you can't pay for, you're having people losing their jobs. People start using their credit cards to make ends meet. And when that happens, people start losing, they start owing more and more money, which is this big spike. And when they can't keep up the payments, they start defaulting and this starts going down. Banks start failing and everything starts failing. And you can see that it's a boom bust cycle. Every single time you have a lot of debt going in, and when it starts going down, it just means you have a big crash. All the gray bands are recessions. All the gray bands are recessions, historical recessions, based on inflation, based on deflation, based on whatever you want. Every single one of these ones are recessionary signals. And it always begins with a big bubble in credit. So if you guys notice, we have had, and it's credit in tandem with inflation. When you combine credit with inflation, it just means bad news. So you can see here is the 2000 one. Let me zoom in a little bit more. You can see the 2000. I don't know why I did this. Why I didn't do this one before. Sorry, guys. But if you guys notice, inflation, credit goes higher. Lose credits. This is inflation. Inflation goes down. You start crashing. Same here. Credit card debt goes higher. It holds because this is when we have money printing, or well, in this case, we didn't have money printing, but we had the dot-com bubble. We started rallying. Inflation started spiking. Credit started going down. And we also had inflation going down at the same time. Recession. Over here, this is back in the 2008 crash. A lot of people started owing money. A lot of people started owing, started having their peak in credits. Inflation started spiking, and it went down really fast. 2008, If you guys notice, so sorry, 2020 is over here. We started having a lot of people owe money. They started defaulting, but we had QE. Remember, we had QE. All this period of time, this was a little bit distorted because we had QE. We had a big spike in inflation. Well, small spike in inflation, but when it started going down, we started seeing the crash. And look at this. This is inflation, massive inflation compared to any point in history. Horrible inflation. And look at credit. Big, massive dump. Sorry, big, massive pump. And look, we started turning down. We've been turning down for the last 3 months. So this is telling us that we are doing this. And this is why I'm telling you guys that we are in a recession. But the thing is that when you get the declaration of a recession, you get it after it starts. And the market just start crashing, they start freaking out. But this data hasn't failed once in calling a recession, and we're having that come into them. We're having that come in right here, right now. So it's very concerning when you start seeing this data show that we are having recession. Same thing happens with non-farm. Same thing happens with everything. Everything is telling us that we have recession. With jobs, look at jobs, look at debt. So if you guys want to interpret this one, the red one is debt. It's what people owe. And this is jobs also. This is not smooth out. But if we look over here, there's a pretty clear trend of people losing jobs and when you have more people owing money. A sign also of a recession is when you have negative job numbers, when your jolts, when your employees start dipping below the mean. That's usually like the sign that you have officially entered the recession. Right now, we don't have that. So it's telling us the forward, as of March, because we don't know if it's going to be calling the same in April because the non-farm hasn't been up. Oh, yeah, it's been updated. Here it is. When this starts going under the mean, when we start having this go under, combined with this, that's going to be like the last leg, the most horrible leg of the recession. So currently, according to where we are right now, we're currently right here. We're just getting started. It's going to be 1 month or 2 months more until we start turning down. And when we start turning down, that's when we start with the recession. So it's telling us that we are 1 month, 2 months away from it. And this data was from April. So maybe in May, maybe on June, we're going to be seeing that reflection that we're going to be getting in a recession. Now, I think it's going to come any day now. I'm feeling it. I'm seeing it. I'm seeing the data. I'm seeing everything calling that. But I can't time it precisely. Last one was in 2021, and the only thing I didn't trade it. The only thing I did was just sell off everything and just let the markets figure out what they're doing. I've been in cash for a very long time when it comes to accumulation, but it's just very, very nasty. Now, if we look into jobs, inflation, relationship. Okay, for example, this is credit cards. And credit cards, this is a little bit more complex one. I'll do a video just about this one. I forgot about this one. But it's just bad. It's bad. If you look into credit card delinquency rate. Look at the credit card delinquency rate. When you have these spikes in delinquency rates, when you have these things start peaking out, meaning that people start owing money, when you start topping out and it starts turning down, that usually tells you that you're going to be done with it. And you can see that it's very convenient because you only had this data since 92, but we're starting to do the same thing. When you start seeing delinquencies go up, it means that things are not looking that good. And delinquencies are going up. And it's not lightly. It's not something like this, something slightly healthy. It's getting up at a pretty fast pace. And last time this was updated was on Q4 2022. So we don't have the Q1 2023 still. If you look at total debt, not the feral debt, you don't want to see that one. But if you look at total debt securities, total credit, sorry. Total credit, this thing has just been on an upside since forever. You've been just having this go up and up and up. But look at recessions. Recessions always happen when you start slowing down. When this thing, this is not a good example because the chart is just so vertical. But usually when you start topping out, when you start slowing down, that is usually when you start with the recessions. Recessions are almost always represented by sideways movement on credit or downturns. And look at where we are right now. This hasn't been updated since March still, but April, from what I could see from bank earnings, it was showing that we were having credit going down. That's why markets were getting really bullish with banks, but you weren't seeing that on the economic data. But yeah, this just doesn't, it's unsustainable. And as long as the Fed doesn't keep on pumping, as long as the Fed doesn't keep on rescuing banks to start keep on doing this, the markets are not going to be able to hold. And the markets are, it's just so amazing, so consistent how the markets can't rally if the Fed stops putting money in the markets. If the Fed stops putting money in the markets can't go anywhere because they're just so top heavy. They're very, very heavy. And the whole rally happened because we had this little pump over here. Because we had the first bank. I forgot the name of that bank. Because we had that bank collapse and the Fed came in to rescue it. But the markets got bullish with that. They used the money and now they're done. And you saw tech go up with it. But everything here, it's telling us that we're done. And we're just waiting for a teensy tiny little bit of upside so we can actually just make sure that we're done here and continue moving higher. But yeah, be cautious about the move to the upside. All the data, everything I'm seeing, it's screaming stagflation, recession, stagflation, recession. Even with the Fed, a lot of people are waiting on the Fed to see the rate cuts because they're waiting for rate cuts. And if you start seeing rate cuts, then, I mean, you're going to be too late. You're going to have missed the top and you're just going to be seeing the big, massive dump. But yeah, all the data, it's not looking good at all. So, I mean, I don't want to be like the super mega perma bear I am usually, but the data is not looking good. GDP is going down. I mean, a lot of people are saying that we're done with the recession because we're done with the two quarters of negative GDP, but the markets don't work that way. You have to look into the bigger macro data, the data I'm showing you guys, to actually call that one. But yeah, I'm going to wrap up the stream, guys. I'm going to be in the Discord. If you guys want to talk, I got a lot of messages to catch up. Sorry, guys, I haven't been catching up. I've just been so busy. Oh, yesterday I was resting with my mother and my wife. But yeah, I got to do a lot of catching up, so I'm going to be chatting a lot in the room today. And thank you for tuning in. I love you guys very much. And be safe. And I'll be seeing you guys maybe all the way until Monday again. Because I'm not going to be around on the weekend, I think. But I'm going to try and give you guys a written update during the weekend, depending on how we close. So I love you guys very much. Take care, guys. Be safe. I'll see you guys